Welcome to TradeTheNBI.com. This is John. This report is for the 9th of November, and you can see that we didn't have much of a pullback. That's actually pretty modest, given the size of this move upward. To have as little retrace as we did into it was about the third, which that's at the bottom side of a normal retrace into a power move like that, especially coming off the heels of an extended run. Of course, you could argue that yes, we went over-exacerbated on the dip, and therefore you get the nice turn right back around, which just puts us a couple 100 points away from the 3,000. So not bad. All in all, pretty decent stuff. Now we do have to take a look at this though, because if we go to the DOC, we've got orange has moved above green, which isn't as big a deal unless cyan is above green, in which case we have both of those taking place right now, and we have green crossing red. That may suggest that we see a little bit more of that retrace, probably towards that 50% move. The worst case would be where the ABM is now, which happens to be at just a fraction below where the algo is. So keep that in broader mind. A little bit of a sell signal intraday can also result in a little bit more movement, simply because the daily has gotten a little soft pretty quick. That happens. We blew through all the new fund money right after the election, and they blew their wad all at once, so to speak. And here you go. They've got shakeout, interestingly, on the NASDAQ, and that all moving back to the zero. But this becomes a critical point. I've talked about this before. Right when you reach that zero, you really have to push continue, because if it dips down at this point, you expect to get a pretty significant dip in your shakeout reading from there. Of course, still Brit exit talk, blah, 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 blah. There was never any reason for a spike in the euro anyway. But at this point, it looks like maybe with the U.S. Fed continuing its move, the U.S. still becomes far more attractive, and with zero growth in the EU, despite what they say, which they're not even really touting it that much, but that will definitely have a drain on S&P as well, simply because it will affect the bonus of earnings that some of the companies that deal with Europe. So that's the reason we look at that all the time. And of course, Treasury is still holding up quite well, despite the fact that it's guaranteed in another month you're going to have another rate hike. It should be moving down towards that 103. If anything. Now oil, this retrace in oil, very beneficial in one aspect. The problem with commodities like this is always it can go too far, but certainly this retrace certainly takes inflation out of the equation, which makes you wonder why the Fed would need to raise rates other than just to arbitrarily do so, which appears to be what their plan is. It doesn't really make a whole lot of sense. The only problem you ever had with growth in the previous past was that you were worried about inflation pressures, but with falling energy prices, that's not really a factor. And gold really should prepare for a next pop-up. Obviously, you've got a complete reset here on the DOC. It's just a matter of waiting, because again, this is that dichotomy. Yes, you have growth and everything else, but we're not seeing that core inflation. So this is the corollary, matching of the oil trade to some degree. But still, there's a heightened interest in gold, and that's simply because you've got some softer economies around the world. So not all U.S. Here was the sideways action that we experienced. Intraday, it was really just nice little waves every time we reached our little bottom. We got our additional pivots. This one stayed clean early on, but then it just went into a consolidation, and then you had the sign coming over, and it wasn't until that P2 came, and we didn't get any additional orange dips going below it. So even when this popped up with the gold, it fell right back. I mean, pretty straightforward collapse. And that's because there was never any reset of the steel until the last run that started right about here, and that just pushed up to the highs, at least intraday highs. The pre-market was higher than that, and that's always problematic when you don't break past that pre-market from a high standpoint. usually you make new lows, and that's exactly what we did. It was a little, and these are like perfect little ABC kind of setups that you would look from a chart analysis standpoint. Comes down, gives buy signal, quick pop, gets overbought with the red dot, comes back down, puts in the next buy signal, corresponding P2 a little bit later on after several bars of nothingness, makes it to the 50%. In this case, retraced again, put in the exact same configuration, which led to another run and another retrace. If we entered Fibonacci, these are probably going to be close to 50% moves at the close. There may have been a follow-through wick. We could do that real quick. Just go from here. I believe we have it on snap mode. Yep, that does that when we have it on snap mode. Ta-da. Just for the fun of it. And where's my bottom configuration? Right there. Okay. Oh, there's the bottom of it. I'm looking at the negative. Boom. There we go. Alright, so the 50% line, I've drawn it backwards with this. Mamma mia. There we go. Well, sorry for the technical ineptitude there. But the point being is that 50% is right here at the white line, which you can see closed just a fraction below, but that is a typical boom, boom, and then comes right back onto it. I like to look at those because as much as people look for their chart setups and that typically becomes the most common move, at least from a fund manager standpoint, because it's easy and it doesn't require much. But now, that doesn't mean you don't get carried through, and this is where people always say, but it went a little bit further. Yep, it does that. And in fact, didn't even reproduce a new buy until moved right across right at the 50% line before this last pop-up, which is fully retraced pretty quickly. Still -5 here from that no move, so I'd be watching out for a little bit more extended weakness simply because we're seeing that softening. If we go sideways lateral, then we can probably get a reset, but I'd definitely be more skeptical of bounces, willing to give them a little bit of an attack, because if the Fed's serious about raising rates just for the fun of it, the market's not going to react as positively as we might expect it to, simply because it's a massive drain on credit. It's also going to destroy the budget deficit for government, so it creates a lot of systemic issues. So we'll keep that one in mind, and we'll just keep watching it, and we'll just go with what the ratings are. If they're willing to put more money into it, we're going to know. We'll see. As always, though, trade well. We'll talk to you later.